Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you and a very happy Thursday. In today's little program, I want to discuss obviously what happened over an hour ago with the ECB interest rate decision and the press conference, ECB press conference, which has just finished, and how it's impacted on the market. But anyway, before I get into that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get to it. So, all those kind people who join me for the watch along, we all know that the ECB surprised the market and raised interest rates by 50 basis points, 0.50 basis points. And they actually increased the ECB deposit rate was announced to zero. Prior, it was negative 0.25. So they've ended negative interest rates, which, you know, this was nice for me to actually type this in for a change. We now see that the EU or ECB is finally part of the rate hike club. And they're still a fair bit behind some of the other major central banks, but at least they've raised interest rates. At the same time, they also announced a new anti-fragmentation tool called Transmission Protection Instrument, or simply known as TPI. Okay, so let me go through a couple of things which Christine Lagarde said in her press conference, because she's done it again. I really thought on that decision we're going to have, a hawk, but no, she's done it again. And anyway, I'll go through it and I'll go through what was said and how the market has reacted to it. First of all, she said, we expect inflation to remain undesirably high for some time. Okay, we all sort of assumed that was going to be the case. She then added, depreciation of the euro is causing inflation. That's actually quite a good sign. That means she's paying attention to the euro, and the euro's depreciation is actually on the minds of the ECB. So you might get further action, right? Okay, that's one point she made. Another thing she said, economic activity is slowing and Russia's wars ongoing is dragging on growth. Okay, we've got that. TPI. She kept saying TPI, obviously the transmission protection instrument, this new tool they have in their toolkit. The TPI allowed the ECB to do a large hike. So it was because of this new tool was the reason why they were able to do 50 instead of being the normal standard 25, which the market expected. So allowed them to be more aggressive. And she also then said, and this is pretty key and pretty important, she said the front loading today of the exit from negative interest rates allows the governing council to make a transition to a meeting by meeting approach to rates. And she then added, future actions will be data dependent. So what does she mean by those comments, and how did the market take it? Well, basically, it's the end of forward guidance. And the ECB has been using forward guidance for the last 10 years. So basically what she was saying, instead of doing forward, last time she did forward guidance, she said they were going to raise by 25. Okay, basically what she's saying now is that every decision, instead of forward guidance, is planning ahead of where where your roadmap is, where your path is, and you tell the market this sort of information so the market doesn't get caught out or it's not surprised. They're expecting it. That's forward guidance. So they've ended that. So basically what she's saying now is any future decisions will be based on that meeting at that time. Meeting by meeting, they will make that decision. No longer they've got the roadmap. She also said by saying future actions will be on data dependent means that all the decisions for future interest rates is going to be all based on economic data. So they're not planning ahead like they used to. And basically, as well as that, the overall press conference was clear as mud. She kept being asked questions about this new tool, TPI, and she kept dodging the question about it. She didn't give any details on how the TPI really works. Or she would say that every member is entitled to use it. But when the press conference kept pressing her for more details on it, she was very, very scarce with talking about it. Very scarce. And though they are publishing a report about it now, a description of it, and this was quite funny. She ended the press conference just as the description of what a TPI is came out, so she wouldn't have to answer any questions about it. She also dodged around the situation with Italy at the moment, Italy's issues, and obviously the gas crisis. So what started off as a bullish day for the euro is now turned into a bit of a bearish one, and I'll bring it up on my chart. And it's all down to Christine Lagarde's lack of answering the question clearly, being slightly still a bit tiny hawkish, but more dovish, not giving us any idea if they have any confidence. Well, not giving us any confidence in their ability. We did sort of hope, maybe the market's sort of hoping they were going to do 50 in September as well. This press conference has put a shadow on a doubt that they will do that again. She kept using the words normalization as well, which she always does. And I tell you, she's, she's really taken the wind out of the euro bull sails. The euro, who was bullish on the back of that surprise 50 basic point, is totally reversed most of its gains because of it. So let's have a look at the euro now. Let's look at the euro now, and we can see it together. Excuse me. As you can see, okay, this was the candle. This is where it was trading at the time of the announcement when the 50 basic point rate hike came in. Then it skyrocketed. Okay, and he went all the way and tested that key level I've been watching for a very long time, 1.02684, which is held. Then on the back of the press conference, from the lack of information or real information in the conference, in her speech to the market, you can see it totally reversed its gains and came down and tested the level of 1.01700. Okay, it's covered slightly, but it's still pretty under pressure by the US dollar. We've got US dollar strength as well, which I'll talk about in a minute and why we have that. But yeah, I mean, it's a complete reverse of that bullish momentum which we had, all because of press conference. And I'll tell you what, in my time, I've seen 3 ECB presidents. Trichet was the first one, I believe. His name's Trichet, I pronounce it. Mario Draghi, of course, was the second one. Super Mario, we used to call him. And then obviously Christine Lagarde now. And out of all of them, I mean, Draghi used to have his own particular style. He would always say, for a considerable amount of time, that would always put that into his speeches, when he would say economic slowdown for a considerable amount of time. That was his way of giving forward guidance. But Christine Lagarde must be an incredibly intelligent woman. She was, a key member of the IMF, incredibly intelligent. But every time she seems to be doing a press conference, she looks petrified. Looks like she's going to be asked a really difficult question she won't know an answer to. So, and like I say, her unimpressive press conference has turned the euro on its head. Currently, as it stands, it's now currently even lower. It's trading out 1.1794. Bring it back up again as well. Interesting. Yeah, it is interesting enough. On the top of this, I read also today about the euro. Obviously, we touched parity last week, and it has since recovered slightly. But one of the analysts at Wells Fargo is very bearish on it. I personally, in the medium to long term, I also think we're going to see more euro pressure. Yeah, it really is, buddy. It is, but like I say, it's down to this press conference. I don't know if you saw it, but you know, it's becoming like and I've seen many ECB president press conference, but this one in particular was anyway. It's Christine Lagarde, but where was I? So yes, but anyway, I'm still in the medium to long term. I'm pretty bearish on the euro as well in the medium to long term. The reason why I say that is I do think this gas issue is not going away. It's going to become a massive problem. We have got poor economic data sleeping through. Obviously, they raised rates today, which surprised the market, but still, it's not really, that press conference doesn't really stack us up with much confidence about what they're going to do in the future. And this is why I said the euro is currently under pressure. They see a bit of buying back 1.0170 for now, but which is quite interesting. And like I say, it's in the middle of the 17 to 30, so it doesn't indicate that it's overbought or oversold in any way at the moment. Anyway, enough about Christine Lagarde and the ECB rate conference. We've had other information, and this is of some reasons why we've seen a little bit of dollar strength as well. US initial claims was announced higher at 251 versus 240 expected. 240 expected. And those who've watched me in my earlier programs, they know that I've been looking at initial claims, and it's slowly but surely is slowly going up higher. And like I often say, I always think that US initial claims is like a canary in a coal mine. It's an early warning system of potential economic slowdown. So that's how that impact on the market. Let's have a quick look at some of the other pairs. Obviously, we looked at the euro, but we are seeing dollar strength. You can see the cable came under pressure on the back of that initial claim. So you've seen a little bit of safe haven buying as well. Gold as well. We'll have a quick look at that. On the back of that, gold's trying to make a recovery, actually, which is quite interesting. But on the initial claims, it's under pressure. It's trying to make a recovery. Currently trading at $1,704.98. So it is interesting to see it's trying to make a fight back after dropping down that psychological level of 1,700. So it's trying to make a bit of a fight back. Let's look at some other things as well. So we are seeing dollar strength. If you see the dollar yen as well. Okay, dollar yen, we see the dollar is again moving higher against the yen. Still very much, especially bear in mind the Bank of Japan did nothing this morning with their interest rate decisions, but we knew they weren't going to do anything anyway. So yeah, we've certainly potentially got that 140 in sight. Let's see how the stocks have opened. Okay. Yeah, slightly sideways with, if we look at the short term, slightly sideways with the S&P 500, 3,948 points. NASDAQ pretty much sideways again, 12,439 points as well. Bitcoin, a great question by somebody who was talking to me earlier on, asked about why Tesla sold 75% of their holdings. I said it was to obviously boost up their cash reserves. That sort of put Bitcoin a bit under pressure. It was trading around 24,000. It's currently back under that, currently trading at 22,598 as well. Something else I want to look at. Don't forget, this morning I discussed Tesla and the fact that their earnings came in a lot better than anticipated. And it was a better earnings report, which surprised me as well. As you can see, it opened with a gap higher, and it's currently trading now at 788.47. So yeah, that's what we've got going on. That was a point I forgot actually to say that point. The point what I was talking about, where I'm fairly bearish in the long term to medium term with the euro. Wells Fargo, one of the analysts at Wells Fargo, he expects it to go to 0.95. So that's quite interesting. So he's expecting below parity again. Another story I want to quickly cover as well, which is happening today. and that's Snap. Snap's releasing its earnings report later today, because obviously don't forget this is the height of earnings season now. Revenue expectation for Snap is 1.13 billion. Now I don't know if you remember this. A couple of months ago, back in May, I did another video on an announcement made by the CEO of Snap, who downgraded their forecast of their earnings back in May, and then the social media market got quite scared because he was saying that the revenue was dropping because of obviously the lack of advertising. Now, though Snap is not the big boy, it's big. You know, it would be my expectation 1.13 billion, still not bad. The way I see it, if this report comes in slightly negative or worse than expected, then we could start seeing a lot of concerns with the other social media platforms, which have got their earnings to come out, like Twitter, like Meta, So that could be quite interesting. So it'll be interesting to see how Twitter reacts, because we've got the Twitter's earnings due tomorrow. See how Twitter reacts on the back of this Snap announcement. So it's something worth keeping a close eye on, I think. Definitely worth keeping a close eye on. The rest of news to come out the rest of this week. Well, for tomorrow, German manufacturing PMI, UK services PMI, and Canadian retail sales. And I probably will be doing a watch along with the Canadian retail sales tomorrow, because I find the Canadian dollar at the moment quite interesting to watch. And I think that there might be a couple of opportunities there. So I'll be definitely looking at Canadian retail sales tomorrow with watch along. Please come and join me. As the market stands, the FTSE is currently up 0.25%. DAX currently trading negative 0.90%. Eurostoxx 50 currently trading at 0.89%. Don't forget, you can ask me questions anytime you wish while I'm here. So don't worry about that. I mean, it's a live show after all. But what was I going to say? Don't forget, I'm going to be back online again tomorrow at 8 a.m. UTC. Then I would do the watch along with you Canadian retail sales. I think that starts at 12:20 p.m. UTC. Then I'll be back online again for about 1:30 p.m. UTC to cover the US session, US Open, and as it's Friday, I'll do my usual wrap up, usual weekly wrap up, talk about all the events we've had this week. And let's face it, we've had quite a few events this week. So yeah, on that note, if there is no questions or no further questions, like I say, like I always say, if you're watching me on Facebook and you enjoyed this little episode, by all means, give us a follow if you like. If you're watching me on YouTube and you've quite enjoyed this episode, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video, found it useful and insightful, and you put up with me because I'm over the top excitable about the markets, I can't help it. I love the markets. Give me one of those. It's always nice to know that you like what I do. But anyway, on that note, till next time, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.